Hello guys, welcome to today's video in the continuation of the price action series, and this is going to be episode 5 if I'm not wrong. Yesterday I did not make a video because it was a bank holiday, and I just had a lot going on, so I wasn't really able to make one. So in today's video I want to talk about what's happening on Nasdaq and what to expect this week, and probably what's going on from the analysis I've been given in the past few days, and let's see if any of the analysis went wrong or something was not right. So first of all, last week, let's go on daily time frame on Nasdaq. I was bullish on Nasdaq, and I remember last week on Monday I told you guys that we're supposed to be looking for buys and targeting these highs, and the moment we failed to take these highs on Monday and closed back in, that meaning that the next day we took liquidity below the Monday lows. And also, Monday created as this bullish daily fair value gap here, the one that is now in action right now, which I'm going to be talking about. And went higher, take this high of the previous, Friday, previous week Friday. And our interest, I remember on Tuesday, I told you guys that price is likely to be interested, in going higher here, and that exactly what happened. You see, on Wednesday we tapped, but we did not really tap it well. We just jumped up there and ran back down. Price was kind of weak last week. These 3 days, price was really weak. Then on Thursday we had now the aggressive bullish close above, and now this changes everything. As much as I said that we're supposed to be looking for sales from this inefficiency up here, which already has happened, because you see from Friday we've been coming down, and coming down to where? To this gap that was created last week. But now this price action here changes everything, because you see this aggressive closure above this bearish daily fair value gap means that price is interested in something above here. So we mark the liquidity points, for example, that one right on that one right there, and you see this is an all-time highs, and apparently you see gold has hit all-time highs, and I think Nasdaq is headed there too. So apparently, coming into a Friday, we started reversing, and when you are reversing, the first question, and I told you guys that when you want to read the price correctly, the first question you're supposed to ask yourself, where is price likely to go to? Like, what's the drawn liquidity? Where's the inefficiencies? Swing highs, swing lows. Where are the liquidity points, or where is liquidity resting? That's where price is, attracted to. And our first point of interaction is this daily bullish fair value gap, which we did not really close well on last week Tuesday. You see, there was some left here. There was some liquidity here, which we just tapped in today, this morning. And when trading price, it's not about being sure, or it's not a matter of being right. It's just a matter of reading and seeing what price is doing. And I'm not sure. I don't know how this candle will close at the end of the day. But from what I would like to see, I was targeting this close to be, like this close to be taken, and we tap into this daily fair value gap. Then we start rallying up, meaning that longing, and probably targeting all-time highs. Now, that being said, as you can see here, we've already tapped that gap, but now we are not sure how this price is going to close on the day, because if we close aggressively bearish below this point of interest here, this bullish fair value gap, then that changes a lot of things. That changes everything. In that we have now changed our bias into something interesting, into something here or here, going lower, and especially if it is backed by a new bearish daily fair value gap. So as of right now, let's just go with what we see, and what we see in price doing. We have attacked sell side liquidity over here. So now we're supposed to be looking for the buy side liquidity above it. So this is gonna be our first liquidity point to target, and the next one. So when we zoom into a shorter time frame, or into a lower time frame, this is 1 minute. Let's talk about Let's talk about 15 minutes. When you take a look at 15 minutes, as you can see, this candle closed back in immediately once we had like taken liquidity. We have already balanced that gap and so on. But still, I don't really like this price action. I don't really like it so much because I was expecting to see some serious rejection. But you see, these kind of displacements, I don't really like them, and they're being backed by a bearish fair value gap. I don't really like them at all. I don't really like them. But at the end of the day, we don't trade what we like or what we would like to see. We trade what price is showing us. We've attacked the buy side, I mean the sell side liquidity. Perfect. We've had 15 minutes candle close back in. Perfect. As much as we don't have the rejection, so what else can we do? When you move into maybe into 5 minutes, let's go into 5 minutes. The price action is still not definite. It's still very weak. Like you see some rejection here. You see that? And this is what I don't really like. But at the end of the day, I'm not gonna be talking about what I like and what I don't like. Prices attack liquidity. Now, for traders who trade ICT or SMC and so on, they will wait for maybe a break of structure somewhere here with a bullish fair value gap before they enter, which is a very good thing or a very good option. But with me, most of the time, I don't even wait so much because I have my own entry criteria. There's some things that I often look into. For example, maybe into 1 minute time frame and so on. So you see already 1 minute is already giving us bullish vibes. We already have that bullish 1 minute fair value gap, and as you can see, price is reacting well to it. We just tapped the consequent encroachment of it, and you see it is now rallying up, which is a good thing. And as it was, rejecting this zone, we had this minor bullish fair value gaps, which you see price really reacted well from. And if you take a look closely on the other side, we have now an inversion. You see this bearish one here. See this one? Let me label it with the red one. You see it? And that is exactly its low is the consequent encroachment, or not really. Yeah, like its low is where price kind of reacted from right now. So as much as I don't really like how price is behaving here, because this is now more of an accumulation kind of move, because we've really dropped, as you can see, during from today's opening, we've been just dropping, and we were targeting to take this liquidity below that we already targeted. And when you take a look actually on 15 minutes again, you realize that we attacked some liquidity that were created in the previous week of during news. This was news here. If you remember this news that really made Nasdaq jump up, this one here. We've balanced that inefficiency, and that's where you see my entry was kind of being projected at, though I was kind of reluctant because I did not like the price action. But at the end of the day, it's not about what we like or what we'd like to see, or it's just follow price. That's the secret of it. Just follow what it's doing. If it's come back and hit stop loss here, because actually this stop loss is supposed to be here, to be honest, it's supposed to be here. See right there. But I'm giving it a little bit space because some things can happen. It may just want to to come down here and do some damage, which I wouldn't really like it to do. So I wouldn't really like to see price come back, coming back down here, because that will be so weak, and that will be so bad. Because so far the reason why I wouldn't like that to happen is because we've done so much damage in here. We've filled a daily bullish fair value gap. Apart from that, we've also filled a 15 minutes fair value gap created by news. And there's just so much liquidity and so much damage that we've done here. And we've not only filled them, we've manipulated, like it is a manipulation inside a manipulation inside a manipulation. We've manipulated like 3 times. Given that today is Tuesday, first we manipulated the daily lows. Let me show you guys this one here. First, we manipulated the daily lows. So I have like 3 reasons why I'm buying here. First of all, we have manipulated Monday lows. You see that one? Second, we've taken liquidity below this swing low here of previous week. Okay. Or in another term, we've taken previous week lows as well. Okay. Now, third, we have also balanced an inefficiency here, right? And fourth, when you go on 15 minutes time frame, we have also balanced an inefficiency that was created during news in the previous week, and it is right here, this one here. So it is an it is a manipulation inside a manipulation inside a manipulation inside a manipulation inside a manipulation. Okay, that's why I wouldn't really like to see price coming down here, because that is not, that would be now too much. That simply means that now uh, it's something is wrong somewhere, or it is just not a good trading day, or not a good trading setup. But from here, I would like to see now a rally up. This hourly candle that we're seeing here, I would like it to close back in at the end of the hour. That will be a good sign. Once it closed back in, then I would like another candle to come in and just, going higher and possibly creating a hourly fair value gap, or maybe 15 minutes fair value gap. I would like to see now fair value gaps being created here, which are bullish, which are supporting the buyers. That's it for Nasdaq. When we go to where's gold? When we go to gold, I remember telling you guys last week, if you're paying attention and you're following up this episode of Price Action, I talked about gold going to all-time highs, and I think the buys that I was talking about last week started from around to somewhere here, yeah, from around this zone, and I told you guys this was TP1, TP2, and I think I just deleted something here the moment I opened this chart. That was TP3, which was the all-time highs. And as you can see, as much as we did not get that entry here last week, if you guys can remember what really happened, I was expecting price to jump in here, but that did not happen. We just kept on going higher and higher. So meaning that you are just supposed to be positioning yourself. And I told that once I give you an analysis of what exactly is going on or generally, it's now upon you to look for entries. Like, for example, even if you trade trend lines, you'd maybe just waited for, you'd have drawn a trend line from maybe from this high, and maybe from to this low, yeah, something like that. Then once it is broken, you position yourself for buys, and it works. Or maybe if you're an ICT trader, you'd have waited, you'd have marked this liquidity swing points, for example these lows. Once they're taken, you position yourself for buys now in a lower time frame. If you trade double tops, double bottom, you should maybe probably be looking for one here. This will be the first one, this one will be the second one. Here we have a double bottom, and you buy. It's like everything works, guys, everything works. So I'm not telling you guys that just focus on ICT, only focus on, no. You can do whatever you want to do. If it works better for you, then that's it. So apparently we're on all-time highs, and as you can see, gold is still interested in going higher. From the look of it, I don't think gold is really be going any lower. Any low movement will be retracement, but as of now, I wouldn't really touch gold, because once we hit all-time highs, we don't have even liquidity to target above, and that sometimes make it quite harder to move in this market when you don't have liquidity to target. So with gold, yes, I'm very bullish, but there's possibility of retracement, because even if you want retracement to happen, you're not sure where the retracement is going to be beginning from. So given that we have tapped all-time highs, a lot of people are going to be positioning for sales. But you see, in like generally, gold is very bullish. So I'm not really going to be touching gold right now. My focus is on Nasdaq. Apparently, that is where my focus is, and because I do understand, you see, sometimes there was a time I said that it's only better you trade maybe only one pair, but I think it's good you have maybe like two, so that you can be able to choose from. For example, you see, gold is not giving good vibes, so instead of being bored and waiting, you can focus on another pair that you see its price action is kind of making sense. So you see, from Nasdaq right now, we are in longs, and I'm expecting this gap, this hourly. A lot of people are currently, maybe the ICT traders, when you go on hourly time frame, they now see this is a break of structure. We're supposed to be going lower. Okay, majority of traders are thinking like that, because they see a break of structure here, and they see that aggressive closure. But remember, today is Tuesday. This is manipulation. First thing first, you need to understand why price is where was price. The same candle that just dropped aggressively already did the damage. You guys need to understand that the same candle that is lying to us that we're supposed to be going lower is already the same candle that has done the damage here. But that being said, I'm not saying that now you see this is now perfect, and there's nothing like going, higher. Anything can happen, and even for maybe the retail traders, they might have drawn a trend line here. You see, and you see how these things kind of move along together. You see how close that is. You see that. And this is not even ICT, this is not even SMC. So that's why I tell you guys, everything works. But you see, me, I was looking at price action. I already had marked this bullish daily fair value gap, and I had interest when price attacked there, to be able to position myself for buys. And that being said, that does not mean that I might hit stop loss here. Anything can happen. This is trading, and if it happens, we just accept and move on. Anything can happen here, but I'm really now targeting these highs and all-time highs on Nasdaq as well. So I'm bullish on Nasdaq. So you as a trader, now it's time you employ your own trading strategies. Now what you can do is maybe wait for maybe a break of structure with a fair value gap, enter, okay? And maybe if you trade Judah swing, I don't think even Judah swing will be giving. Okay, I'm not really sure about that. It's been long since I traded those type of strategies and so on. But you can now employ any type of strategy you want from here once you understand where the market is going to. So I think that being said, guys, I've done my part, and I hope you guys will be careful on managing risk and just stick to your rules. Mine is just to give you analysis and overlook what's really happening and so on. So that being said, I hope you guys have a good trading, and cheers. See you in the next one. Make sure to like, subscribe, and leave a comment or any question that you have, and see you in the next one.